This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. As I mentioned during yesterday's report, I was stopped out of a long trade, and I mentioned how we might look to the previous support line to act as resistance. So right now, that horizontal line on the chart is the previous support line, and we could see that during yesterday's candle. I'm going to zoom in a little bit here to give you a better idea of what I'm talking about here with this particular trade idea. So we're zooming in here. This is the level of support that was violated, and now prices closed beneath support and then retested it on the other side, and they also left prices left behind a long wick right here. So I would actually adopt a bearish bias now, and the high of that candle with the long wick is 88.70, and that's where I would place my stop. So moving forward over the next 24 hours, I'd wait to see prices to get up maybe above that 88 figure, where I would then short the pair and again place my stop above the high of that candle with the long wick. Again, 88 in the 88.70 area. And this is usually how I do set up my trades. The stop is always first, where I'm going to place my stop. I want my stop to be well protected, and once I've determined where I'm going to place my stop, it's not a certainty that I'm going to get into the trade. It really depends on the price action, whether or not price action gives me a favorable risk to reward, or prices move to a level where I can enter with a favorable risk to reward. The next chart is the Aussie Kiwi, and not much has changed here. The sell-off continues from that doji candle here. That was the initial short signal, placing our stop above that 129.35 high. Two reports back, I mentioned right about here how I also like the short trade at this location as well, and right now prices are continuing to fall. What I would say, if you did enter on the short trade on either of these locations, I would look to take profits at the opposite side of the previous resistance line, which might act as support at least temporarily. So then I would take at least a portion of profits and then see how the market reacts to this line. And certainly if we have a close beneath the previous resistance line, then I would continue to hold that short trade. So that's to be determined. But again, I might take half the profits down, and I think this line right now is just above that 126 figure. So that would be my target for at least a portion of the position. Next chart is the Pound Swiss, and not much has changed here. Again, still waiting for prices to come down and test the longer term support line. If we zoom in a little bit on the last candle here, you can argue that this is a doji. The only thing is that there's a very long wick to the downside. So I really don't like this trade idea. It would be my least favorite of all the trade ideas that I'm setting forth tonight. With that being said, again, where am I going to place my stop? My stop would be located just above the high of this candle here, the candle with the long wick to the upside, but with a much longer wick to the downside, again, which weakens my confidence. So the high of that candle, 173.84, so I'd place my stop about 10 pips above there. And again, if I can keep the risk relatively tight, relatively low, then I might look to enter at that location. But again, confidence is low, but it really doesn't matter if I'm only risking 30-40 pips on the trade idea, which could have a couple hundred pips on the upside. The next chart is the Euro Swiss, and not much has changed here either. As I was mentioning during yesterday's report, we did have the shorter term range. Prices have now closed above it. So if you did enter a short term trade on the upper side of the range here, I would exit that as prices have closed above that line. But again, I wouldn't really recommend any new fresh trades here. I'm personally just waiting for prices to come down and test this longer term resistance line, which actually looks like it's getting closer and closer now. And that line right now is just beneath that 153 figure. So that's what we can keep an eye on for the next 24 to 48 hours. Again, my name is Matt Russell. I'm an FX Power Course instructor